Welcome to the Deep Dive. Today, we're plunging into a sector absolutely foundational to our digital lives: semiconductor equipment and materials. Think of it as the bedrock beneath every smartphone, every AI breakthrough, every piece of advanced tech you touch.
Precisely. We've pulled together some rich data and reports, and our mission today is to distill the most critical insights from three giants in this space: Applied Materials, ticker AMAT, Lam Research, LRCX, and Teradyne, TER.
Yeah, we'll be dissecting their recent performance, news, financials, and technical indicators to understand what's truly driving them.
Exactly. And to make it even more tangible, we'll run some paper money scenarios for each. It's kind of a fun way to visualize how recent market movements could have impacted, say, a hypothetical $10,000 investment.
Right. And this isn't investment advice, of course, just a deep dive into the numbers to help you connect the dots.
That's a crucial point. All discussions and calculations today are purely for illustrative and educational purposes, based solely on the provided source material. They should not be considered investment advice. Always consult with a qualified financial professional before making any investment decisions.
Okay, good. So with that clear, let's unpack this.
Let's do it.
First up, let's explore Applied Materials, AMAT. This is a formidable presence in the industry, boasting a market capitalization of over $151 billion.
Huge. They're essentially the architects behind the scenes, providing the manufacturing equipment, services, software, the stuff that powers the semiconductor and display industries. Founded way back in '82, employ about 35,700 people.
And what's particularly compelling about AMAT recently is its price action, right? Just yesterday, September 18th, the stock saw a significant jump, over 6.5%.
Yeah, closed at $189.76. And it wasn't isolated. It kind of rode a broader rally among chipmakers, partly sparked by that news of Nvidia's $5 billion investment in Intel.
But it hasn't been entirely smooth sailing, has it? We've also seen a wave of analyst downgrades from firms like Mizuho, Daiwa Securities, BofA, around mid-August.
That's right. Those analysts flagged concerns about increased competition from China and maybe a somewhat weaker short-term outlook. So, yeah, it's a bit of a mixed picture.
Interesting. Geopolitics always playing a role here.
It is. The U.S. pulling TSMC's waiver for China shipments, that definitely creates headwinds for the whole sector. Yet, AMAT's CFO indicated in late August that government-backed foundry moves wouldn't really alter their forecasts.
Suggesting some resilience, maybe?
Or perhaps a strategic insulation from some of those pressures.
Yeah.
And they are making strides with their advanced DRAM technology, which is a positive sign for future growth, especially as, data demands just keep climbing.
Okay, so diving into their financial health. AMAT looks robust on paper. They reported a substantial income, was it $6.83 billion?
Yeah, on $28.61 billion in sales, and their gross margin is strong at 48.5%. Profit margin standing at an impressive 23.88%.
And for those watching debt, their debt-to-equity ratio is quite low at just 0.35. That's pretty healthy.
Very healthy. These numbers collectively paint a picture of a company that's not just profitable, but seems exceptionally efficient with its capital. Their return on assets, ROA, is over 20%.
Wow.
Return on equity, ROE, is a standout 35.64%, and return on invested capital, ROIC, nearly 27%. These are all really strong indicators that AMAT is adept at turning assets and investor capital into earnings.
Okay, so what about valuation? How does it look there?
Well, when we look at valuation, AMAT trades at a price-to-earnings, or PE, ratio of 22.62. The forward PE is a bit lower, 19.94.
Great.
Their earnings per share, EPS, is projected to grow over 7% annually for the next 5 years, though next year's EPS growth is projected a bit more modest, like 1.47%.
So that raises an interesting question then. Does the recent stock surge already reflect all this future growth, or is there still more room, you think?
That's the key question, isn't it? Always tricky to tell.
All right, let's bring in our paper money scenario. Imagine you, the listener, placed $10,000 into AMAT about a month ago, say mid-August. What would that look like today?
Okay, so given its performance month, or perf month, that's its percentage price change over the last month, was an impressive 16.98%. The price per share back then would have been approximately $162.22.
Right.
So with your $10,000, you would have acquired roughly 61 shares.
Okay, 61 shares. So after this recent rally, what's the value of that hypothetical investment now?
At yesterday's close of $189.76 per share, those 61 shares would now be worth approximately $11,575.36.
Not bad for a month.
Not bad at all. That's an estimated paper profit of $1,575.36, translating to about a 15.75% gain on your initial $10,000. And just for scale, those 61 shares represent an incredibly tiny fraction, 0.000000076% of AMAT's total shares.
Wow. Puts in perspective. Okay, turning to technical analysis, AMAT's current price, $189.76. It's still about 12% below its 52-week high.
Right, the high was $215.70, but it's significantly above its low of $123.74.
And its relative strength index, the RSI 14, that momentum indicator,
Right.
Where's that sitting?
It's at 70.79, and importantly, it's trading above its 20, 50, and 200-day simple moving averages, the SMAs, which are all trending positively.
So an RSI over 70, that often signals overbought, doesn't it?
It typically does, yeah. For some traders, that might suggest a short-term pullback is due, possibly indicating a time for profit-taking. But the consistent, strong performance across its SMAs, I mean, it's up over 14.5% above its 20-day SMA. That suggests robust upward momentum.
Look for trend followers.
For those following the trend, this could mean looking for opportunities to buy on minor dips. The overall sentiment seems strong, especially with, room still to run before hitting that 52-week high. It's a dynamic picture.
Definitely. Okay, let's shift our focus to Lam Research, LRCX, another cornerstone of the industry. Slightly larger market cap.
Just slightly, yeah. $159.29 billion. Lam Research, founded in 1980, based in Fremont, California, about 19,000 employees globally.
And Lam's been active with partnerships, right? I saw news yesterday about a chip-making deal with JSR.
That's right, September 17th. They've resolved some past legal disputes to collaborate specifically on chips for the AI era. This collaboration, especially focusing on advanced packaging technologies, seems like a really significant leap forward for them.
And it seems the market is taking notice because LRCX has literally been hitting new all-time highs. What does that tell us?
It speaks volumes about the bullish sentiment around the company right now. They also recently launched something called Vector TEOS 3D, which is a critical innovation for tackling these advanced packaging challenges in chipmaking, really important for the demands of AI.
But it's not all roses, is it? I saw Morgan Stanley downgraded them.
Yeah, that was September 2nd, downgraded to underweight. It highlights that even amidst strong positive news, there can be differing views on future meth paths.
Always good to see both sides.
Yeah.
Okay, financially, how does LRCX stack up?
Exceptionally strong. Their profit margin is an impressive 29.06%, even higher than AMAT. Their efficiency just shines through. ROA of 26.73%. ROE soaring to 58.24%.
58% ROE? That's huge.
It's outstanding. And ROIC of 38.87%. It means they're incredibly effective at generating profit from shareholder equity, like getting amazing mileage from every dollar invested in the company.
And didn't they just raise their dividend too?
They did, yeah. Announced a 13% increase in their quarterly dividend in late August. Another sign of management confidence.
What about recent operational growth?
Powerful. Their EPS saw a remarkable 73% increase quarter over quarter. Sales jumped over 33% in the same period.
Incredible numbers. Valuation.
LRCX trades at a PE of 30.38, forward PE of 24.90. Their EPS is projected to grow over 12% annually for the next 5 years, with next year's growth projected even stronger at nearly 14%.
And the PEG ratio?
PEG ratio, comparing PE to growth, is 2.48. Generally suggests it offers pretty good value relative to its earnings growth potential. Right.
Time for the LRCX paper money scenario. Same deal. $10,000 invested a month ago. What are the returns?
Okay. LRCX had an incredible perf month of 25.90%. So the price about a month ago would have been around $100.33.
Right.
Your $10,000 would have secured you approximately 99 shares.
99 shares. And what would that investment be worth today after that significant run?
Those 99 shares at yesterday's close of $126.32 would be valued at approximately $12,505.68.
Wow, over $2,500 profit on paper.
Yeah, an estimated paper profit of $2,505.68. That represents an impressive 25.06% gain on your initial $10,000 in just 1 month. Again, tiny fraction of total shares, 0.0000078%.
Okay, the technical picture for LRCX must be interesting given it hit new highs.
It is. Closed at $126.32, which is actually 2.47% above its previous 52-week high. It's really been on a tear, surging over 124% from its 52-week low.
Definitely. This is a classic case of evaluating strong momentum. An RSI that high traditionally suggests a stock is due for a pullback, maybe a sell signal for short-term profit takers.
But again, the momentum angle. Exactly. For momentum traders, consistently breaking through and holding above a 52-week high is often seen as a powerful buy signal. It indicates exceptionally strong bullish sentiment that could push it even higher.
It's trading well above its moving averages, too, I assume.
Robustly above all its key SMAs, yeah. Up over 17.6% above its 20-day SMA. The real question here is whether this kind of parabolic rise is sustainable or if a correction is, just around the corner.
Fascinating trade-off there. Okay, our final deep dive brings us to Teradyne, TER.
Yeah.
Also U.S.-based semiconductor equipment. Smaller market cap, though.
Right, smaller but still significant, $18.90 billion market cap. Teradyne, founded way back in 1960, they specialize in semiconductor tests and also robotics segments, employ about 6,500 people.
And they're really leaning into AI, too, aren't they?
Actively embracing it, yeah. Reports from September 16th confirm they're integrating AI to supercharge their test business. With the explosion in AI chip demand, the need for sophisticated testing equipment is paramount.
And they have that new memory tester.
Exactly, the Magnum 7H memory tester, seen as a key strategic move, especially for high-bandwidth memory.
And I saw some buzz that Nvidia, the giant in AI, could give this stock a major boost.
Absolutely. That kind of endorsement, even indirectly, speaks volumes about their potential in that space. They also got an upgrade from Morgan Stanley back in late July, specifically citing that Nvidia optimism.
And their earnings.
Q2 earnings beat estimates, led to a significant stock surge then, but again, mixed signals from analysts. Goldman Sachs initiated coverage with a sell rating back in July, so definitely differing views on its future.
Interesting. Okay, financials for Teradyne. What stands out?
Well, they boast an excellent gross margin, 58.84%, which is actually the highest among the three we're looking at today.
Highest gross margin, okay, but...
Their EPS for this year is down nearly 3%. And quarter-over-quarter EPS saw a really significant drop, over 57%.
Oof, that's quite a drop. So recent performance is lagging.
That recent EPS performance is definitely an important point. Indicates some short-term challenges they're navigating. However, their future projections look quite strong.
How strong?
EPS is expected to surge over 44% next year and average over 20% annually for the next 5 years. So they're banking on a big recovery.
And their balance sheet. Debt.
Incredibly strong balance sheet. Remarkably low debt-to-equity ratio of just 0.03. Very little debt.
Wow. Okay, valuation metrics. PE.
Valuation-wise, TER has a PE of 41.22, forward PE of 26.32. Its PEG ratio is 2.01, suggesting decent value relative to its projected earnings growth if those strong future EPS numbers materialize.
Big if there. Okay, paper money time for Teradyne. $10,000 invested a month ago.
All right. TR had a perf month of 7.41%, so the price approximately a month ago would have been $110.62.
Okay.
Your $10,000 investment would have purchased around 90 shares.
90 shares. How did that investment perform up to yesterday's close?
At yesterday's close of $118.82, those 90 shares would be worth roughly $10,693.80.
So a smaller gain here.
Yeah, an estimated paper profit of $693.80, or about a 6.94% gain on your initial $10,000. Still positive, but less dramatic than the others. Those 90 shares are about 0.000056% of KR's total shares.
Got it. And technically speaking, where does TIER sit?
It closed at $118.82. That's still about 17.58% below its 52-week high of $144.16. But it has surged over 80% from its 52-week low, so it's had a good run from the bottom.
And the RSI, overbought, underbought.
It's at 60.31, so pretty neutral territory, actually.
Okay, not signaling extremes. How about the moving averages?
TIER is trading above its 20, 50, and 200-day SMAs, which indicates a healthy uptrend overall, though it's worth noting its perf year is still negative at negative 7.16%, and year-to-date is also down slightly at negative 5.64%.
So it's still recovering from earlier declines on a longer time frame.
Exactly. The RSI is 60.31, doesn't give a strong immediate buy or sell signal based purely on momentum, but its current distance from the 52-week high, combined with those strong projected future EPS growth numbers,
might appeal to some investors looking for growth potential.
Could do, yeah. Especially those looking for a stock with maybe more room to run before hitting previous peaks, assuming the growth story plays out.
Okay, great breakdown of the individual companies. We've walked through Applied Materials, Lam Research, and Teradyne. What key patterns, or I guess critical differences, emerge when you look across these three giants?
Well, what's truly fascinating here is the the nuanced story emerging from the sector. It's almost like a split picture. On one hand, you have this undeniable, really robust growth driven by the insatiable demand for AI and advanced chip making.
Right. We saw that clearly with Lam Research.
Absolutely. LRCX posted incredible quarterly sales and EPS jumps, that huge 25.90% perf month, almost defying broader market skepticism. And Teradyne, with its targeted AI integration and robotics, is clearly banking on this future-driven growth to overcome recent EPS dips.
So some companies are really capitalizing on that immediate AI-driven demand, riding that wave strongly.
Seems like it. But then, on the other hand, the whole sector faces these considerable geopolitical headwinds, especially around China and export controls.
Which seem to impact AMAT more directly with those downgrades.
Exactly. That pressure contributed to the analyst downgrades for AMAT, even as the company itself shows internal resilience and diversification. So while a rising tide, might lift all boats in this sector.
It's not lifting them all equally.
Precisely. Each company's ability to navigate these specific currents, whether it's through strategic partnerships like LRCX, specific tech innovation like tiers testers, or diversified market positioning like AMAT, plays a crucial role in its individual path.
It really shows that even within the same booming sector, you have to look deeper, doesn't it? Reveals a whole spectrum of risk and reward.
Couldn't agree more.
What an incredible deep dive into the semiconductor equipment and materials sector. Yeah, from these multi-billion-dollar titans like Applied Materials and Lam Research to the specialized high-growth potential story of Teradyne, it's clear this industry is complex, dynamic, and just absolutely essential to our technological future.
Indeed. We've seen how global events, relentless technological advancements like AI, and shrewd strategic partnerships all play such a critical role in shaping the performance and outlook of these companies.
Yeah, and the rapid shifts in analyst ratings and stock prices. It really underscores the importance of staying deeply informed and understanding the details behind the headlines, not just, reacting to the headlines themselves.
Well said. Context is everything.
So as you, our listener, reflect on this deep dive, maybe consider this. In a world increasingly powered by semiconductors, how will this ongoing race for tech supremacy and those ever-present geopolitical factors continue to redefine the landscape for these foundational equipment providers? What's the next big shift you'll be watching for? The one that could either fuel their next leg up or maybe pose their next profound challenge? Lots to think about.